Ian Harris, Outcrop Silver. We have one of the highest grade primary silver projects in the world. It's 37 million ounces of silver, and we're currently drilling on a fully financed drill program looking to increase our silver resource.
Good to have you over here. Good to have you over here. Now, you've been doing a tour of Europe.
Yeah, we've been spending some time now in Europe, between Germany and Switzerland and some Luxembourg, and now we're here in London.
Do they understand that the grade is within reach?
They definitely understand that. And actually, there's a lot of conversation around silver, and I think some of the more reasonable conversations is definitely on the debt focus of the world debt. You know, what's going on, lots of conversations about the tariff, short-term, medium-term, long-term impacts, but obviously very sophisticated in the commodity and in the equity side.
Tell me more about that, okay? Because look, you've been preaching the high-grade nature of this and the scaling up opportunity ahead of you guys. So, and I want to come to that, but talk to me about how people are feeling about silver. We've seen what's happened with gold today off the back of the U.S., China renegotiations, I think we'll call it. You know, people are trying to think, well, how does that affect silver? Will that affect silver? Is there something stronger, more fundamental about silver because of the industrial component to it?
There has been discussions on whether or not it's an industrial or trades like a precious metal, what that means in terms of the tariff impact, et cetera. But I think the overlying conversation is, at least long term, nothing overshadows the debt side, right? The overwhelming amount of debt, and then also the moving away from the dollar as a world currency, right? So those are the.
Happen? You think that's on the table?
I do believe that it's an inevitable. It's always a question of time, right? So will it happen tomorrow? I don't think so, but how quickly it happens is more like the question. And what's the alternative, I guess, is the other question, right? But at least we're seeing by action, right, there is definitely more precious metal buying going towards the east, whether it's the bricks and gold or the overall push between the average investor in silver, especially towards the east. And even, you know, today we look at the future, we talk about silver price, we look at the futures price, we look at the COMEX, we look at the LME, and is that even the reasonable index for pinning down silver price? So a lot of different interesting conversations. Feel that this tariff thing is more smoke and mirrors, I think, is the biggest takeaway. Definitely has short-term impacts, but probably doesn't have a long-term impact than the overall what's going to happen with the debt.
And what's that do for silver equities? Because a few companies we've spoken to recently seem very pleased themselves that they've got onto an index, you know, part of the ETF group of buyers, versus, you know, some smaller companies are, you know, still relying on retail here. So does the market look any different going forward in your opinion? You explain what you think is going to happen with silver and potentially US dollar as well. What's the reality between equities and the kind of the state of the market as far as retail is concerned?
So on the silver side, you know, there's been a lot of complaints. Oh, copper went up, equities did not. Gold went up, equities did not, which is changing if you look at the indexes recently. It is over, at least in 2025, right? But silver has always had a tendency, at least I call them a kind of the cool kids club, the tier one primary silver projects, the really good projects, which Outcrop is a part of that group. We've always seemed to trade already for a beta to silver, right? So, and about a 2-to-1. So we always traded to a beta, at least in 2024, right? And sometimes it takes about 3 months. Notice is the longest time for the correlation to happen because we kind of go as a pack, right? You know, it's a BlackRock Silver, Dolly Varden, Vizsla, especially before they put out their PEA, which seems their valuation has been tied more to a multiplier to the NPV. But we watch the charts, right? And yeah, somebody's up 1 month, 1 quarter, but then the next quarter they're down. We all kind of go around a line, gravitate around a line of valuation, which is a dollars per ounce valuation that moves up or down based on silver price. So we saw it in the silver. We're already seeing it in the silver, the silver side, right? And I think more the question while most people would agree that silver is undervalued and eventually it will go higher, right? But some people have been hearing the same story for 10 years, right? But
Yeah.
I wouldn't have bought into it 10 years ago, right? There's some other different fundamentals that make for me the argument undeniable because of the supply-demand
I
component.
totally agree with you.
Supply
It
growth.
was wonky, quite frankly, and obviously silver as a byproduct was kind of a bit wonky. It was hard to figure out, something that we never touched in our investment thesis. But now it's different. The fundamentals are different. I want to kind of get to the fundamentals in terms of the companies themselves. You talked about like $1 an ounce, maybe all boats floating on that kind of same multiple. You can do something different. You've got grade on your side, okay? But you've been talking about this project for a while. Where are we today? And you're showing me a bit of silver a year or so ago, but where are we today? What's the kind of ramp up to actually getting to meaningful production? That's what people care about. Show me the money.
I think it's a couple things, right? First, you have to navigate your valuations, and I think a lot of projects have problem or get into because you have to maintain your valuation over an extended period of time, right? And have it going up. And so I believe silver is going to explode, right? And I've seen more indicators that it could be coming sooner than later than even in the past. Okay. However, I don't know when. So I must have a plan that creates value for my shareholders until that happens and beyond, right? Mm-hmm. And I think Vizsla Silver actually demonstrated a nice change from a valuation based on a resource to being valuated onto an NPV. And the obvious in production, you're going to get a valuation based on your EBITDA, right? But silver's kind of nice in a way because it definitely treats projects as a group. You know where your valuation is sitting. I mentioned for the group we're in, you're getting valued for dollars per ounce in the ground, and we're all very close to the same value, but you know what market values as, right? So in the near term, independent of what happens to silver price, right, the way for me to add value is add more ounces than those ounces cost to add, right? So that is, and then make sure that when you're getting to the resource stage that your NPV justifies your current valuation.
Do you think that's the only way to play it? Look, this morning, bit of news out this morning, another acquisition, Mag Silver. We two big ones and a big one, 1.6, I think. Two big ones last year, 1.8, 2.1. That sort of quantum. Those were people that produced, right? So producers are getting rewarded. Producers are buying each other, JVing, whatever you want to call it. Surely it is a case like with any business, you need to produce cash. Why this sort of defensive attitude?
Well, I'll be honest, because market isn't valuing projects that way, right? As a producer, you're actually doing acquisitions to add production, right? Because it's the least risky way to add production than buying a project and developing. And I think maybe you could argue Pan American acquired Mag Silver because they got a producing asset and they got a upside of a project. But the justification was for the additional production. Because if you look at the valuations are not based that way. They're not rewarding a quicker pathway to production, right? They're valuing assets for their resource, for their NPV based on very important hurdles, right? There's more than just the NPV, but the valuation comes back to the NPV.
Do you think this is a silver thing? Is this a silver thing?
I think the band is tighter,
right,
in silver, right? There's less companies, and you look at it, we all seem to be very similar valuations for a true primary quality project. There's obviously some very important hurdles in order to get into that valuation, and I also call getting from that valuation to this valuation a graduation process. But yeah, I do think so. So now, I know where my market is valuing, so I have to make sure that the pathway we're on, right, creates a steady increase in valuation. And so the big change from last year to this year is I talked about the pathway to increase, but if my valuation is based on the number of ounces, I'm really just trading within a band. So we're really excited now. We've had 6 veins that were in our original resource estimate. We've already discovered 5. We got a fully funded drill program to get us to that next resource increase and will continue to increase until we get to that. I would like to get to that above the 100 million ounce.
It's the 100. That's what we're targeting.
That's correct. Targeting the 100 million to go into then, your PEA, PFS, or whatever.
Right.
Of course, accelerate it as quickly as you can to be able to get into production. Now, I want my cake and eat it too, right? Because the other is going to capital markets, always not getting into cash flow, right? Is always a risk, right? We've always talked about we're permitting now a smaller scale operation, pilot scale that significantly de-risks the project at the same time.
And the reason I ask you is because if I look at the gold space, the reason I ask you about why silver is different, if I look at some of the gold companies that have been rewarded the most in the last 18 months, it's those who have gone from big $1 billion capex or $800 million capex, even $400 million capex, and just significantly reduce the starter costs by halving the size of the project, but just getting some cash flowing, because it then allowed them to get on with an expansion program through exploration, typically, or to kind of fund sort of a slow ramp up of the production.
I would like to see those examples, because unfortunately market values you, and it's one of the biggest problems that I see, right? You have a big project, right? And then it comes back as $1 billion, but you get valued on your NPV, and then how are you going to raise the capital? Right? But if you came up with a $200 million project, your NPV isn't big enough to justify your valuation, right? So it's a difficult problem that companies are facing, without a doubt. So you almost have to have the PEA, PFS, FS talk about a very large program, get that big and large NPV, but start it out as a
Well, that's what's been happening. That's what's been happening.
Where there's a starter project that quickly can ramp up using the same cash flow to expand the
because you've got to be able to demonstrate the potential scale of the opportunity. Yeah. But at the same time, I think there's a slight relief when the companies go, actually, we've got something which is a third of the cost. That's a starter kit. Starter for 5 is this thing. Money flowing in a market where money's been super expensive, super unavailable, quite frankly, and alternative financing these days doesn't mean what it used to. Thankfully, but they're having to go either downstream and get people strategics to kind of come in, or they're having to get some funky, export agency type funding in place, or they're having to look at debt via some of the plant suppliers, the machinery guys. It's really crazy out there at the moment, but it's kind of working for gold.
Correct, and that's the cost of capital has gone up, interest rates have gone up, but it's been less inflationary than previous run-ups of gold price. At least that, because that was normally what killed projects in the past, right? When we remember when gold went from $500 to $1,800, right? We also saw an inflationary, steel went up, fuel went up. Everything that cost to build a mine went up, and you saw projects went from $2 billion to $4 billion to $6 billion type dollars, and got a lot of CEOs' heads got rolled on those type of things. So at least we're not seeing huge ramp ups in steel, fuel, other things that would be because also it's not we're trying to build 70 projects at the same time. There's just very few projects, so it's not 24 months to get a mill. It's not all these long wait times to get equipment arrive, et cetera, right? Yeah. I almost feel like and again in the past, the majors, what they ended up doing was expand production at all costs. Costs went through the roof.
Margins went out the door.
Margin went out the door. Yeah. Gold price went down. Everybody got fired. Yeah. Right. So they're being more disciplined this time around. They're doing mergers and acquisitions, right? But it seems par, right? Not paying over, but looking for value through increased production, right? Not more Caterpillar trucks, right? Not more SAG mills. Not that what also drives up the cost for everybody else trying to start a project. So it's a very interesting time right now.
That's very interesting.
And by the way, I didn't mention and gold's at $3,000, where you did a PEA or you did an FS at $2,000 gold. So your margin, you're actually getting rewarded heavily for getting into production.
Yeah, and I think some of the better companies, we spoke to one this morning, they did $160 million this quarter. Very nice indeed. But his big message was, we got to keep working on the margin. We don't get lazy. That's what this industry is really good at. You end up playing the money back in the ground. So look, gold's having a fun time at the moment. That's why. And by the way, I need to say, I don't mind what the model is, as long as you can clearly articulate why you're doing it, and that is, and you'd have aiming for 100 million ounces, and then we're at a point where I think you've got options available to you.
I think the biggest reason is I explained it because I must have a project robust enough to explain my existing valuation.
Yeah.
Right? A lot of the great projects you hear about getting built is because somebody else left a disaster, they couldn't get it financed, whatever, and they, I can
Some of my favorites.
pick that up for pennies on the dollar.
Yeah.
How many projects you heard? This project had $150 million spent into it, right? And we picked it up for 2 cents, right? I mean, well, we have to avoid those pitfalls moving forward. We have to be more disciplined and think more longer term. And that's why I think how market values your project today, you must have a pathway to get all the way down to the end of that finish line. Right.
And how much of your project is reliant on your belief that silver will be $35, $40? I see what you were saying earlier.
Zero.
Good.
Right?
Tell me why.
Because we say we know what our valuation is based on today, right? And I'm going to give you round numbers, so please don't, this is not financial advice, right? But our overall, we want to spend $12 million this year, basically targeting an increase in value of about $50 million. Round numbers, based on our current valuation, what others are being valued at. So that's a 4-to-1. So even if silver price comes down a little bit, okay, maybe it's 2-to-1, but at least we're now finally on a pathway. It really took 2024 because previous work was all on this little resource area, and I'm not going to be spending money on marginal ounces. You need to take bigger steps into the resource. We jump down, okay? So it's at least we're in a point now that the dilution is less than the value that we're creating. So we're at least in an accretive way of creating value.
Does that $1 per ounce, it doesn't tail off the bigger you get. That's just stays flat.
Doesn't seem so.
You produce ounces, you're going to get
I
$1.
do believe. I am a believer that maybe it's not marginal, and maybe it's not additional ounces, but they're more marginal because you're trying to squeak out a couple extra ounces a key. So they got to be good ounces. And I think it's more important, right? I think we have we have 100 million ounces at least of good ounces, right? Maybe we could get to 200, but you're kind of on the smaller veins or the marginal pieces, and to make that jump and to make sure your valuation is better than your previous valuation, you need good ounces. I mean, look at Visla's Silver's PEA. It came out at 90% after-tax IRR, right? And that doesn't happen by itself.
Yeah.
Because geologists want to maximize ounces. Engineers want to maximize NPV. And that means cutoff ratios get lower and lower the higher prices go. And guess what? It's pretty much preordained that it should come out 20%. So if you're not managing it, it's going to come out that way. So it seems like they did an excellent job managing the step from resource in order to development stage, and they're also very near. I mean, it's an older mill, et cetera, so you can see that pathway of how they're going to get into production. And I think that as an excellent example of doing it right from start to finish.
Okay, $12 million this year. That's a fair chunk of change to be putting in the ground, and maybe somewhere between 2 and 4% type return on your valuation with that. What would stop that? Silver price doesn't seem to worry you too much. Sorry, don't jump off the face.
We're more resilient to silver price.
Right. You got that grade there. Okay, that's kind of cool.
That's an advantage of grade, major advantage, right?
Where are we in terms of resource right now?
We're at 37 million ounces.
Right. And if you spend $12 million, you've got to have an expectation of a range of ounces that you think you can add, because it's not completely greenfield. So how do you get after those ounces, and how do you most quickly add to that resource?
So now you're gonna get me into trouble, and if I give too much guidance. But
So.
We have 37 million.
Yeah.
Right. We're targeting internally. We want to be at least 60.
Okay.
Right now.
So $12 million.
A lot of it has to do with when we end up saying, now that's the last drill hole that goes into that resource, because we've had drills turning for over a year now, and they're going to continue to turn, right? So what we're doing to mitigate, like first we mitigated it by saying discovery. Whew, now we know where the ounces are coming from. Yeah. We had a hole last week which was 20 meters at 992 grams. Like that's a big relief, because we have more confidence in the ability to deliver. But the truth is, we need to create more value at 12 million. So that really means we only have to add 6 million ounces at our current valuation. Of course, that would be a big disappointment to market, right? So we're trying to do at least 4 times that number in total ounces we would like to.
But it also says to me, I've got a sense of how much more money it's going to take for you to get to 100, right? So there's a bunch more money to be raised, but you want to raise it at higher.
But if we go
share price.
60,
Yeah.
60 to 100,
Yeah.
that's 40.
Yeah.
So I'd like to do it for a similar amount of spend.
Yeah.
About $12 million to get us to that 100 mark.
But
is where we're going.
we're sort of 18 months.
24.
You're at 24.
Oh, from today,
Yeah.
20 months.
Okay. So
That's correct.
So we've got a sense of the quantum you feel you need to spend. We've got a sense of the time frame, and we've definitely got a sense of what's going on in the market at the moment for pure play silver projects, good ones. So you definitely got to believe in the future of silver if you're investing in Outcrop.
Well, but okay, believe in that it's going to go through the roof one day, or believe that silver will always.
I'm
be
just
around
happy if it
30.
stays here.
That exactly, and I think that's what I like about our plan, right?
Yeah.
Give 10, provide 10, give 40, right?
Yeah,
the
the day I invest in a company based on the commodity tripling in price, that's the day I need to stop investing, because that's you're out of your mind and you're out of control. So if
the error in doing things that way isn't the wait time. It's not I could have used that money somewhere else. The problem is we always need money. Right?
Us being
the exploration junior, exploration or development companies, right? We always need money. So your value actually gets diluted down before that you're actually losing value, right? That's why we're so happy to come up with we're here at a point now that I know that every dollar I'm spending, it's going to be creating value, right? And it's been de-risked, right? Because we know where it's going to be coming from. And also know where our value is at. So it's until that time, right? There will be a return. We're going to break out of the band, right? That we've been in over the last 18 months.
just you.
Well, in our case, we've been trading to our band because we're trading to a multiple to silver price, right? So unless you add more ounces, you're really not going to make a significant impact long term on your valuation.
Like silver equities at the moment. Mexico's parts of Mexico got challenges, shall we say? The Scheinbaum effect is, I think, positive, but I'm not seeing a lot of action in the markets. Backing that up. Retail are not here again. So you think that part of that breakaway is going to be a factor of retail coming back in looking for good, strong fundamentals rather than just it's silver, it'll do, which has been the case for a long time.
It depends what kind of market we're in.
Well, that's my point is, do you feel it coming back? You're bouncing around Europe, I'm not.
One of my favorite tweets I ever saw recently was Bitcoin is a big pile of doot-doot, right? But that pile of doot-doot is making me a lot of money right now, so I'm going to keep going until it doesn't, right? So it tells you that sometimes people don't care about fundamentals as long as the share price is going up. And that, unfortunately, share price is going up and greed coming back to the market is when retail normally piles in. So I am happy to apply the discipline while we're in a difficult market because I care about the long haul.
But that's what I'm getting at, right? Otherwise, you just sit back and go, I won't raise the money I've just raised. I won't spend $12 million. I'll just sit back and we're all going to rise together. No discipline required.
Yeah, unfortunately, out of view, out of mind is too. It's hard. We're all tempted to do that, right? So. But it doesn't work. You're not putting out news. You're not doing anything. You're slowly going down to zero because there's also a bifurcation in market. There's projects that are moving forward and there's projects that are not moving forward. And that is probably a 10x. So you really don't want to get into that trip either. So the only solution is make sure you're on a pathway that creates more value than you're spending. And that's why we spent a whole year getting to this point. Really the team really pulled off some miracles, in my opinion. we did 100 right-of-way agreements and with the local community to be able to get all the way down to these southern sections. They've really delivered, and we're in a really strong spot now, right? Independent of what happens to silver, and still have the big blue sky, which I do think is coming, right? But until then, you want somebody's investment to continue to go up until that day comes.
Yet you think you've done all the right things in the last 12 months?
I don't think we've been perfect, but yes, we've put in a plan and we've executed on that plan. Over the last 12 months, we've done what we've said we were going to do.
Good, all right. See you soon.